Hey folks, Andrew Packer here. Welcome to Trading Tips. Be sure to click like and subscribe to our channel if you haven't yet, and be sure to check out our podcast, available wherever fine podcasts can be listened to. So let's get into today's edition of Trading Tips. You know, I grew up in California, and we would always have history about the state and how people would come out to the state for the gold rush. But as an investor, the real lesson that I got from it is that in the gold rush, the people who go out and pan for gold and who spend all the physical time and labor looking for gold nuggets, well, they don't always succeed in their efforts. But the people who come out and set up a shop or a saloon or otherwise sell supplies to the miners, those are the folks who usually consistently make a lot of money in that kind of, activity. So let's take that idea and bring it to the 21st century. There is a global boom going on right now as people around the world are continuing to increase their standard of living. They want finer quality foods than what they had in the past. They want better electronics. They want all the gadgets that we take for granted in America. Over the past 20 years, the amount of people on planet Earth who have gone out of extreme poverty living on less than $2 a day has dropped by more than half. That's the power of capitalism, and nobody's really got a good kind of criticism to capitalism when it's bringing people out of poverty like that. Now we can complain about how things aren't as good as we would like them to be here, and there are certainly things we can improve on here, but the fact of the matter is, around the world, there is a huge boom in populations that are growing wealthier, who want to have better things. One of those big areas is in technology. Now, of course, right now, as we get into the middle of the summer, there's another little trend that's going on. It's one we've seen before. That's played out a couple of times already, and it's this sort of trade war fear. And it goes through a few steps. Obviously, the market goes to all-time highs. People are feeling pretty good about the economy. There's a little fear here and there, but not much. And then we decide, or rather, our president tweets about how, hey, it's time to hit China with some more tariffs, or to otherwise try and do something to move the needle on trade. And again, it's true that we could certainly improve our trading relations with China and make some improvements there. Ideally, improvements that, everyone would agree on and be happy with. But usually what happens is the market looks at this new event and it gets some uncertainty in there, and uncertainty brings stocks down. Markets like certainty, even if it's bad certainty, like a new healthcare law. A few years back when the Obamacare law was passed, the healthcare stocks sold off initially, but then, once they kind of knew that the uncertainty of any bigger changes was afoot in the industry, they went ahead and trended higher. So markets like certainty, they dislike uncertainty, and all of these trade war tweets, all of these tiffs that have popped up in and out of the markets over the past few years now, it creates some short-term uncertainty. And that's given us a lot of pullbacks in the market. Arguably, some of the bigger pullbacks that we've seen in the past few years have been from this. So combining these two ideas, the first that we're in this cycle of a little bit of a market pullback on trade fears, and on the second idea that there is sort of this global trend towards people having more and nicer and better things, there's a pretty good opportunity, I think, shaping up for investors going into the fall, or at least, as the market continues to sell off, it's one to look at. And that's the idea of investing in the semiconductors, or semis. It's an interesting aspect. It's a form of our technology. When you look at your iPhone, it's not necessarily kind of the obvious parts of the iPhone. It's not the apps you use. It's not the phone calls you make. Rather, the semiconductors, they make the chips that go inside it that allow you to connect wirelessly, that allow your information to be displayed on the screen, that allow you to be able to use your fingers to swipe on your phone and otherwise interact with it in that way. It's all of the technology that goes into it. Much like how, the gold miners needed picks and shovels and pans to be able to get gold out of the ground and out of mines. The semiconductors serve a very valuable place in the world. And whenever there's a lot of fears in the market, the semiconductors tend to get pretty hard. That's because the Chinese economy has a huge demand for increased computing capacity, both civilian applications, military applications, government applications, however you want to look at it. We're doing more things. We need more and more processing power. We need more and more memory. We need more and more graphics power, things along that nature. So whenever things are selling off in the market, there's an opportunity in the semiconductor space. Now, of course, if you're an investor, what should you do? I would look for some of those big down days in the markets that we've started seeing pop up again, and I would look for that as an opportunity to start buying into some of these names, especially when they're particularly heavily beaten down. The easiest thing for investors to do is to buy the sector-wide ETF, ticker XSD. That's just an unleveraged play on the semiconductor space. You can also, of course, find a couple of funds out there that will do double leverage, triple leverage even. The idea being that, hey, if the semiconductors as an index are up 1% a day, you can make 2% or even 3% of your money. But I don't really see the need to get into the leverage plays, especially with the market volatility we get. Rather, I would just look for one of those market pullbacks where we go back down 10% or so from all-time highs. Even if we go down a little more from there, that's still enough of a bargain that the semiconductors are going to be down usually lower, and they'll usually give you some better returns going forward. Now, obviously, you don't have to just buy, the entire sector. You can pick and choose a lot of individual stocks, and there are some great ones out there. Some companies I like include Micron, which does just kind of a lot of interesting things in the chip space. You've got NVIDIA, which does more graphics processing. It's not quite, the semiconductor, but it's another play on a lot of the global growth and a lot of new technologies that are coming out. And you even have a company like Applied Materials, which, does a lot of these back-end processing companies. Now, looking at some of these trends, obviously, it's going to be one of the more volatile parts of the market, and that can be a little more fearful. But with any of these positions, whether you're buying the leveraged fund, an unleveraged fund, or any of the individual names, you can also do options plays on it. And that's another great way to ensure that when the markets go down, you buy into these names for a rebound, or you can buy a call option and get sort of a leverage play to help your portfolio kind of get back that much faster when the markets rebound. Now, is there some risk to this space? Sure, a little bit. There are some fears that things are going to possibly slow down, that the trade war is going to somehow accelerate, that things are going to get ugly. But the fact of the matter is we've been through this trend several times before, and even though there's been some very heated rhetoric, we've always kind of had a cooling of tensions, and we've always had people saying, hey, let's come back to the table, and we've always seen things move higher from there. So looking at the opportunity today, I think this is one of the better ways to play a market sell-off. And there are a lot of different ways to do it, with or without any leverage, or whatever leverage you're comfortable with. And if you own any of the individual names in the space, obviously if there's a drop, it's a good opportunity to buy more shares, and then look for an opportunity to take some of those profits off the table just as things go up. So that will wrap things up for this edition of Trading Tips. Until next time, I'm Andrew Packer, wishing you good trading and good financial health.